I talk about investing, banking, economics, and politics. Sometimes I'll keep it simple, sometimes it gets a little tricky, but I always try to make it interesting for you. Dear friends, welcome to my workroom. Please welcome my guest from United States, Phill Low. Welcome, Phil. How are you today?
I'm doing well, Tadas. How are you?
Okay, fine, thanks. I'd like you to introduce yourself to us.
Sure. So I am an Austrian economist, an economist of the Austrian school. That's a very specific school of economics that focuses on libertarian principles and maximizing freedom and sound money and minimizing government control and tyranny in our lives. So we advocate for sort of a return to the gold standard and small government, no central banking, that sort of thing.
In addition, I might add that Phil did a nice YouTube podcast with Mario Ineco, an economist who has been talking and discussing gold and silver for a very, very long time. So also, he could be named as Mr. Smart Money because he was investing in derivatives, right?
Yeah.
Okay, so I hope you don't mind if we divide our conversation into three main parts. First of all, I'd like you to talk about gold and silver. Why do you invest in these metals? Then about banking, debt spirals, stagflation, and finally about geopolitics. Are you ready?
Sure.
So let's get started then. I was shocked when you mentioned that there are only about 8,000 tons of gold in the United States, while the obligations amount to 19 million tons. Where did you get this information, Phil?
So the 8,300 tons is what the government has in Fort Knox and in West Point, and I think one other vault in California, I believe. The 90 million tons is the notes we have written for the gold. The calculation you get is there are $3 trillion, these U.S. Federal Reserve notes that have been written. And those notes on the Federal Reserve's balance sheet are written at $42.22 for 1 ounce of gold. So theoretically, you are supposed to be able to walk to the Federal Reserve and knock on the door and say, I have $42, I want 1 ounce of gold. Now it's not possible. You know, that door is closed and has been closed since 1971. But technically, that is what the value of the dollar is. It's 142 of 1 ounce of gold. The trouble is the Federal Reserve keeps writing more and more notes for gold, and there are $3 trillion. And I don't remember how many tons of gold that $3 trillion is, but it's way more than 8,300 tons. And then on top of that, the private banks are taking dollars and they're issuing bank credit in what's called fractional reserve banking. So they take your if you deposit $100, they'll take that $100 and they'll loan it out to 5, 6, 7, 8 different people. And that will generate bank credit of many thousands of dollars off of that single $100 deposit. So if you take the bank deposits, if you've taken the bank deposits and you count up all the Federal Reserve notes that the banks owe, and then you add the number of notes the Federal Reserve has printed, and then you convert that from ounces of gold into tons of gold, you find out that we in America, for the public debt and private debt, it's public plus private. The public plus private debt is about 90 million tons of gold. Now, there is private gold too. So I think about a quarter of America's gold is in Fort Knox and the rest is in private hands. So there's probably about 24,000 tons of total gold in America. But we've written 90 million tons. We've written notes for 90 million tons of gold. And there's not enough gold in the solar system to pay this debt off. And the debt is still increasing at an exponential rate. So we're just writing more notes and notes for gold every single day. This is all going to be defaulted on, and it's going to be a giant monetary panic that's going to reverberate through the entire world. And I'm sure Lithuania will be affected as well.
Okay, Phil. So why do you invest in gold? You know, Warren Buffett is a famous investor. What did he say about the gold? He does not invest in gold despite his investment in silver. Hint to Hunt Brothers, price dropped from $50 to 10. And his aversion to gold is based on his value in the investing principles, right? As he considers unproductive assets that has underperformed stocks in the long run. So why, Phil? Why do you invest in gold? And do you invest in silver also?
I look at this a totally different way. You actually can't invest in gold. Gold is exactly right. So an investment is a vehicle to get more money.
Yes.
Gold is money. When you take your notes of whatever current, what's the Lithuanian currency?
Euros.
Euro. Okay. When you take the euro and you go and buy, when you buy gold with it, you're not technically buying gold. What you're doing is you're taking your note to a shop and exchanging it for the money itself. You're getting yourself raw money, and you're putting that in your drawer later. The reason it feels like investing is because of inflation. Inflation is causing the numbers everywhere to go up. So when you purchase that and then later you check, you say, how many euros does it take to buy some gold? You see the number has gone up. So you say, oh, well, this has made me wealthier than I was before. But that's actually not true. Because of inflation, the price of everything is going up. So what you have done is preserved your wealth. You haven't gained wealth. Gold and silver are wealth. They are wealth itself. Now, people say, well, then you can store your wealth in many things. You can store it in real estate. You can store it in tech stocks. You can store it in money market funds, wherever you want to store it. However, the problem is because the currency itself is inflating, and it's going to inflate. Has Lithuania ever had a hyperinflation?
Yes, we did in 1991.
Okay.
We went from Soviet Union, and we have our currency, and we had something like hyperinflation.
Yeah. So you know what you probably were alive, so you know what that feels like. Yeah, you're a young man. But
I was very young at that moment, but yes, I remember that currency.
Okay, so when the currency really loses touch with reality. It sort of disappears and floats away like a balloon, and like a children's balloon in the sky. The currency just kind of floats away from reality. So when that happens, you're left with, well, all that stuff that was valued in these currencies is now suddenly just crashes. So real estate, stocks, bonds, all these things crash in value relative to the actual money itself, which is the gold. Gold and silver is the only thing that will preserve your wealth. It will freeze it in time so that when everything else crashes, this stays constant. And then the gold holders at that time go out and they buy all the other assets with the gold and silver.
Yes.
So that's why to acquire gold and silver, but don't think of it as an investment. It's not an investment, it's money.
Yes. And I did a research about Roman Empire, and I double checked on the prices, and the prices are actually almost the same.
Yes.
You could buy a wine for 3.5 euros, and you could buy a car for 40,000. There were no cars, but the horses or something like that. So the prices remain the same during the thousands of years. So gold preserves the value, whereas the currencies are dying, and usually they die in hyperinflation. So thank you, Phil, for your answer. And another question is, aren't you afraid that history might repeat itself? Then owning gold was illegal in the United States and people could go to jail for possessing precious metals. Do you worry that it might happen again?
It is possible. That would be extremely tyrannical, but it has happened before. In such a case, I mean, I have some ideas. You can vault for Americans. I'm speaking specifically Americans. You could probably vault in Texas. I don't think Texas is going to let the federal government. I mean, they'll probably go into open revolt, and Texas is a very heavily armed state. You could also vault offshore, so the Cayman Islands or Switzerland or Singapore. Those places typically. That's where the mega rich vault their gold, and they're not going to raid Singapore because that's where their gold is. So if you want, you can do what the mega rich do and vault it offshore if you want. There's other things. If you bury it in your backyard, the gold seizure was actually in 1933. The gold was made illegal again in 1973, I think. In 1933 is when they came and they seized everyone's gold, but they only got a quarter of it. The rest was just buried. People turned them into necklaces. People buried them in their backyards. They turned them into collectible coins or whatever they needed to do to dodge that seizure. So you can I don't know what the rules will be. If gold bars are made illegal, then you know what you do. You tie a string around the gold bar and put it around your neck, and now you have a beautiful necklace. And you have outsmarted whatever the rule and regulation is. This time is very different. In 1933, most Americans trusted their government. And the government was much smaller back then. We've had almost a century of the government becoming much, much, much bigger and more tyrannical. And I think people are, at least, I don't know what it's like in Lithuania, at least in America.
It's totally the same in Lithuania. The government became tyrannical. They want to invest our deposits from the bank and go to fight Russia.
It's a bit mad. It's a mad world. So the people are increasingly fed up with this, and the people can say no. And if the people say no in large enough numbers, the government will back off. So I can't answer that question directly as say I have a genius, I know exactly what's going to happen, but I can say there's tons of strategies, whether you just bury it or do whatever you need to do. As a Lithuanian, you probably remember the dark days of the Soviet Union. There was thriving black markets. So
yes.
If gold becomes illegal, then we'll just trade under the table. We'll just trade in the black market.
Yes, of course.
Nothing else to do.
Lithuanians are good at that.
Yes.
So, Phill, I will ask you directly. Aren't you expecting a short squeeze in the silver or gold markets at this moment?
Yes, absolutely. I think soon. I just saw Eric Jung on Mario. He was saying at the current rate of silver drain, I think there's actually about 7 months of silver left before it's completely drained. But that might accelerate, might decelerate. I'm not an expert on those specific markets, but my Austrian education does say when you suppress the price, and what they're doing is they're creating silver derivatives. They're saying they're creating paper silver, and they're saying, hey, we're going to sell this paper silver out into the market. And so that pushes the price down because the market says, oh, this paper silver looks like the real silver. So there must be more silver in the world than we thought. And that causes the price to go down. But when the price is pushed down like that, what do people do? They say, oh, I'll buy the real silver. The real silver is really cheap right now. So they go out and they redeem the real silver, and that pulls it out of the market. And eventually, what are you left with? You're left with an empty vault and a lot of paper silver. And that's what's called, then you have the short squeeze. When it happens, I don't know, but I think it will be soon. And so I would encourage people that are interested in this space to move into the position they want to move into.
Do you trust that clock and all these numbers that silver to paper ratio is 1 to 377, or gold that it stands at 1 to 129? Do you trust that clock?
I don't know enough information to comment on that one way or another. If you put a gun to my head and made me guess, I would say those numbers sound a little low, but I don't know. I'm not a data guy. I'm a theoretician. So I think about money in theory and what is money, how does it relate to the world, that kind of thing. The day-to-day of the trading of honest money is not something that I focus on.
And what about silver to gold ratio? Is it right? During the periods of history, it was 1 to 15, I think, in ancient Egypt, and now it's 1 to 90. What do you think about this ratio?
Gold is the money of governments, banks, businesses, and the wealthy, and silver is the people's money. So when banks are operating, so when the banks have the gold in the vaults and they are writing notes for the gold, the bank notes, and they're giving them out to the people, and the people are using them, and everything's honest and everything's fine, then you can just use gold. Silver kind of goes dormant as a money. It goes to sleep. You can just use the gold notes. The trouble is when the banks cheat, and they always do over time, it's just one of these things that happens over time. Banks get dishonest and start making more notes than they have the money. When that happens and the bank blows up, and the banking system, blows up and collapses, the notes don't work anymore. And so when you go to buy some food and you try to use a note, the man slaps your note and he says, I don't want your note. I want money. You need to put money in my hand. And the problem with gold is it's really high powered. To buy some food, is a little grain of gold will buy you a meal. So you need a currency, you need a metal you need a money that is not that powerful. And so that's where silver and copper provide that retail money where you can buy a shirt, buy shoes, buy food, that kind of thing. As long as the banking system is not working correctly or not working very well, then silver and copper will go up to 15 to 1, 16 to 1, copper less, of course, a lot less. I don't even know what the copper ratio is, but copper is a money. But the silver ratio will go to 15, 16 to 1 and stay there. Once the banking system gets back online, we could see silver go dormant again. I don't know. Having silver as a money, as a live money, keeps the banks honest, because you can always just say, well, you know what? I'm not going to use your notes. I'm going to trade in silver. One of the things they did in 1964 was they got silver out of America's currency. The government forced us to just use the notes. So once we get back onto that standard, I know for a fact we will see 15, 16 to 1 silver during the panic. When the euro is dead, when the dollar is dead, we're going to see 15 to 1 silver. I don't think it's going to stay there. I think it might go up to 30 to 40 to 1, something like that. But 90 to 1 is completely dormant, sleepy silver, no money at all. But we'll see something around between 15 and 30, I think, over the long run. But my advice to people, if you have silver, once it hits 15 to 1, rid of your silver and get whatever assets you can as quickly as possible. So if you want to buy the boat, if you want to buy the airplane, if you want to buy the mansion with on the mountains, whatever, buy it at that time, because you're not going to get a better deal than 15 to 1.
Thank you for your answers. Let's talk about the banking. People are always asking me, how on earth is it possible for the Fed or ECB to go bust? They can just print their own currency, right? And secondly, central banks are backed by government tax revenues. It is possible to recapitalize the banks, central banks. So how do you think that central banks are going to solve all these debt problems? And what do you think and see in the near future? A debt spiral like we had in 1929 or a stagflation like in 1970s?
They're not going to solve the problem. They're going to hyperinflate, and the central banks are all going to collapse at probably roughly the same time. Now, will they die completely? I don't know. The Bank of England has been around for 500 years, and they've caused all kinds of trouble, and they're still around. Will they survive it? I don't know. The only way to get rid of a central bank is for the people to all dump the currency. You have to say, we're not using this anymore. Now, it's not a conscious decision. It's not like everyone gets together and I call Tadas and I say, hey, Tadas, we're going to get rid of the euro. We're going to get rid of the dollar. Let's stop using it right now. No, it's just as more and more and more notes are printed at an exponential rate, so it just goes up vertically, people just dump it and leave it in the streets and they say, we can't work with this. So that will absolutely happen. What happens on the other side is fuzzier. At least in America, they will, if they want to try to save the central bank, they have to recapitalize with the gold in Fort Knox. And it's going to have to be redeemable this time. Because in 1933, they said, oh, we'll keep the gold safe. Don't worry. They patted us on the head. Don't worry. Everything's okay. We're going to keep the gold here. This time, people aren't going to believe that. So they'll say, these notes, this is a note for $50 for an ounce of gold or $100 for an ounce of gold. They're going to go to the bank and say, I want my gold. Give me my gold. The bank will have to do that, or they're just going to dump the currency will not work. If the currency isn't backed, the new currency just gets dumped as quickly as the old one. Central bankers, they have this error in their mind. They think the currency is the money, and it's not. It's just a note. There's nothing you can do to make this piece of paper have a value by itself. It only has value as it's connected to gold. So when they make it redeemable, people are going to test that. Now, over time, if it stays redeemable, the paper is more liquid than the gold. It's more useful, right? Because when you carry gold around, you have to carry this big purse. It's like the Middle Ages. You have to carry this purse of gold, and it's heavy, it's dangerous, it's cumbersome, it's annoying. So it's a lot easier just to have the paper in the wallet and you keep the gold in the bank. So if people trust the bank, they will continue to use the bank, but they're going to test it. They're going to test it a lot more. This is probably going to be for the rest of our lives. I don't think you and I are going to see dishonest money again in our lifetimes. I think this explosion is going to be so big. I think it's going to be 100 years, 200, 300 years before we get another inflationary cycle like this one.
At this moment, United States grows at approximately 4.5% annually compared to GDP. 6.5% of GDP is government purchases, meaning the private sector at this moment is contracting about 2%, and that's on nominal terms. If we factor in inflation, The most productive sector in the United States is actually contracting about 5% per year. Then you try to recapitalize your central bank, you have to raise taxes. And United States technically is in a recession. So how are you going to do that? It's very difficult to do that right now. The Bank of Japan has enormous debt. They hold about 60% of their assets in bonds. And that's a massive loss. I think it's 40,000 times underwater. So what are all these central banks are going to do with all this debt, and how on earth are they going to recapitalize?
The Austrian School of Economics is very unique. I reject terms like GDP and CPI because the model itself is flawed. If the government orders us all to dig a big hole and then fill it back up, so we all sit around digging a giant hole and then we come around the next day and fill it back in, GDP went up by how much work we did and got paid for, but we did nothing useful. And this happens all the time. So because G is factored into it, if the government mandates that we all must move into electric vehicles, and so a company like Tesla comes along and builds a bunch of electric cars, in the free market, we wouldn't participate in this. We would still just drive small gas-powered vehicles. Whatever the market wants is what the market gets. GDP might go up, but that doesn't mean we're better off. We are driving cars we would not normally drive. So I reject all those notions. We are making less than we used to make. The reason we are making less than we used to make is because government is taking over. Government is becoming larger and larger and larger and becoming a bigger employer. When this blows up, the American government is going to collapse by 95 to 99%. All these workers are going to be fired. They're going to have to find something else to do. America is going to look a lot like Russia in 1991. So I fully expect to see, a lot of violence in cities, politicians being assassinated regularly. Hope not, but that's what I'm expecting. I'm hoping we don't go that far, but that's what I'm expecting. The question is, how can central banks recapitalize themselves? Hopefully they won't. Hopefully they will die, and the governments will say, you know what, let people trade in whatever they want, and we won't use central bank. We'll make coinage again. The government does have a role, which is to make gold and silver coins. And then people can take those coins to private banks and put them in the private bank notes for that. That's the way this happened up until the 1900s. In the 1800s, in America, there were private bank notes. There wasn't a Federal Reserve note. So when you got a US dollar, it was a silver coin. You took to the bank and you got, First Bank of Illinois note for it, and you could use that note around town. We will go back to that level. Now, the question is, will central banks try to seize power again and be able to issue notes? To do that will require government seizure of gold. It's not just the government saying, okay, we're going to let you print notes again. They have to have gold to back those notes. So the governments are going to have to get very grabby. They're going to have to go and start kicking doors down, turning you upside down and shaking your legs until the coins fall out of your pockets and taking your gold and silver from you. That's the only way they're going to be able to recapitalize it. In this kind of chaos, people that do that, they don't live long lives. It's not healthy. It's not a healthy business to be in. So I don't know. We'll see. We'll see what happens.
What do you think will happen with the Fed's interest rate in the near term, the dollar exchange rate, and the stock market in the near future?
So this is how we're going to know if the dollar is dying or not. The money supply must grow at an exponential rate, and the credit supply. That's just the way it is. The dollar is debt now, and the debt is the dollar. That's the scam. That is the fraud. Because the Fed has raised interest rates, they are trying to lower they're lowering the rate of credit creation. And when they lower the rate of credit creation, they slow down the money supply and it leaves the curve. When that happens, a deflationary crash is inevitable. A crash like 1929 in America, where there are not enough dollars, all the banks go out of business, and then people go scrounging around looking for cash to pay off their debts because everybody is terribly in debt and we can't get out of it. When this deflationary crash starts, the Fed is going to slam down interest rates back to zero and start the money printer going again as fast as absolutely possible. The only interest rate the Fed controls directly is the overnight rate, which is the rate banks lend to each other over a 24-hour period. Everything else is market determined that is affected by the Fed. If this is the end game, if the dollar is truly dying, when the Fed slams interest rates back down to zero, only the federal funds rate goes down to zero. Everything else is going to keep going up and up and up. And there's a reason for this. When you think about this as a normal person, when you think about a loan, if you want to go to the bank and take out a loan, there are three main things. The first one is, are you going to pay me back? Right? Can you make this loan? The second one is, how long do you want this money for? How long do you need it, right? And the third one is, what do I need? What am I going to do with this money? Do I want this money more than that? So these three things are sort of the calculation that goes into the lender's mind when he thinks about loaning the money out. In a high inflation environment, there's a fourth factor. What will this money be worth when I get it back, right? So if inflation is at 10%, 15%, 20%, and you make a loan for 5%, when you get that money back, it's worth less than when you lent it out. So you have a negative loan. So in a high inflation environment, interest rates just keep going up too. And we can see this if you look at Argentina about 5 years ago, the inflation rate was 102% and interest rates were 105%, something like that. So to take out a loan, you'd have to pay more than double back what you got back over a 6-month time period, something like that. When interest rates continue to go on, when the Fed slams things down to zero and interest rates keep climbing, that's when I'm going to say the dollar is here. The dollar is dead. The end game is here. Now it is time, and that's going to be the scary time when things start going crazy. So that's what I'm looking for.
Let's talk about the private banking. Have you noticed in the United States that small or medium-sized firms are struggling to get credit from commercial banks? Well, in China, you can get a credit up to $160,000 in just 1 minute. But in Europe and in the United Kingdom, the small firms are struggling. In Lithuania, it's the same story. Is it the same in United States at this moment?
I believe, yes, it is. And that is a function of the Fed, of the slowing of the money generation. So because there's less credit in China's full on inflation right now. They're just print. So they're just trying to get it out. In America and in Europe right now, they are pretending to be fighting inflation. So as a result, the banks are being more strict about who they lend to. And there's less cash available right now.
Yeah, and also we can lend to the government, right?
Yes, the government's always borrowing, but the Chinese government's always borrowing too. The Chinese government's as bad as any of them.
Let's not forget about the elephant in the room, right? The derivatives market. The Bank of International Settlements, this reports that the total national value of the derivatives market is about $1 quadrillion. That's equivalent to the twice value of all global assets, or 40 times the United States GDP. How on earth do you think is it possible to manage such a risk?
Oh, it's not. This is going to blow. This is going to blow, Tadas, and it's going to be the biggest catastrophe in humanity, the biggest financial catastrophe in humanity. All these derivative markets are going to blow up, and they're going to blow up at the same time. And so it's like musical chairs. The music is going to stop, and the people who have gold and silver will have money, and the people who don't won't. And it is as simple as that, Tadas.
Have you read the book called The Great Taking?
Yes.
Yeah.
Yes.
So I am a little bit skeptical about real estate.
That's fair. That's absolutely fair. So The Great Taking, David Rogers Webb, I think, wrote it as his name. Yes. Okay, so the Great Taking is it's a deflationary scenario, and it is when you buy that stock through a broker. The broker borrows money against that stock, so they're the borrower. Somebody else lends them money in exchange for that stock. Now, when the end game hits, the broker goes out of business. Somebody else has rights to that stock over your rights, so you will not get the stock. The lender who gave money to the broker gets that stock.
The same actually happened to me. Then Ukraine conflict happened. I bought the same day as Goldman Sachs and JP Morgan did in Russian markets because of the panic. People started selling all the strategic companies of Russia. And I did the same. I bought the same day. Unfortunately, in London, they froze my all stocks right now.
Yeah, so that's definitely a risk. It's definitely a risk, and especially in the chaos of what's coming.
Yeah.
So if you are going to invest in stocks, the safest thing to do is to actually get the paper certificates, and that's a real pain. That's a real pain in the butt. But you can do it. It is possible. You can have them mail you paper certificates of your stocks. The second closest thing is to call your broker and say, make sure you are not loaning it out, because not all brokers do this. There are honest stockbrokers out there. So find the honest stockbrokers who don't loan them out, and then put your money with them. Now they're probably more expensive. I think like Robinhood, the cheap stuff, like the ones you can use on your phone, they are definitely loaning your stocks out.
They actually, Robinhood forbid to buy PSLV shares a day ago.
Yes, I saw that. Yes. Robinhood is not your friend. Robinhood is absolutely the enemy. So go through probably a smaller and probably more expensive and boutique brokerage firm. But if that's the way you want to play, if you want to play the game, that's how you would play it. I would say do not use a phone app and think your investment is safe in any way, shape, or form.
Okay, Phil. Our government in Lithuania has national radio and television. It's called LRT, Lithuanian Radio and Television. They just published an article in which they stated that people should avoid investing in gold or real estate. Instead, they have to invest in bank deposits, government bonds. They didn't mention which bonds, maybe junk bonds, I don't know, but ETFs and stocks. What do you think about such an advice in a current economic state?
That's the worst advice I've ever heard of, Tadas. The people that are promoting this, it's state enterprises, and in America we have the same thing. We have MSNBC and CNBC, the cable news. They do the business stuff. They're all pumping. Oh, now's a great time to get back into Tesla. Now's a great time to get back into the stock market. Don't let your money sit idle. Get back in there, right? They're trying to keep this going because the people at the very top, you never know their names. I don't know who these people are, right? The people at the very, very top, they feed off of you. They're parasites. They feed off of you. But to feed off of you, they need you to keep playing their game. You have to have the belief that you can get rich in the stock market, that if you play the cards right, if you play the game right, that you'll join them, that you'll be one of them. I promise you never will be. The game is rigged against us. So the best way to play this game is to get out of it. Get out of it completely. And don't listen to state broadcasting systems.
All right. In addition, I want to mention that in United States and in EU, all the banks are over leveraged. In United States, I think the leverage ratio is 1 to 10 at about 10%, and in European Union, the average bank leverage ratio is about 5%. That means that bank has only 5% of its assets and 95% of liabilities. On top of that, Ursula von der Leyen seeks to invest bank deposits into the war with Russian Federation. So what do you think about the bank liquidity in the United States and in Europe?
If investing in war was a good idea, the USSR would never have fallen, right? If investing in tanks made you wealthier, the USSR would be the richest country on earth. That's it. Buying military equipment makes nobody better off because that's stuff that could have been turned into consumer goods and isn't. The banks are massively over leveraged around the entire world. This is what I said before. The system's going to blow probably very soon. I don't know when. And it's gonna be a worldwide blow up. There's nowhere that's different than anywhere else.
Okay, Phil, thank you for your answers, and let's turn to geopolitics. I will tell Andrew Sheckman's numbers. United States has a lot of debt, 36.6 trillion. And to my perspective, I think United States is not kind of broke. People usually don't know what trillion means. 1 trillion seconds back, it would take us 31,000 years ago. That's how much 1 trillion actually is. You're an economist, you should know what ceteris paribus means. But I will tell to my viewers that it's a Latin phrase that translates to all other things being equal or other things held at constant. So Andrew Sheckman gave me such numbers that in 75 years, ceteris paribus, United States will have in unfunded liabilities about $200 trillion. And the total assets of the United States is federal government assets. It's about 5 trillion US dollars, of which 1.6 trillion dollars is in students' loan. So, Phill, how do you think this is going to play out, and what are the possible consequences for the global financial system? And what is the better way to lose status of reserve currency?
We're not going to that level at all. I think Trump is going to be the president under which the dollar dies. It's not his. I wouldn't say it's his fault any more than I would say it was, if it had died under Biden's fault or anyone else's, time. It's not their fault. It's just this is when it goes vertical. When the money supply goes vertical, it's over. Now, what does the world look like as that's happening? The American Empire is done. The Roman Empire collapsed when their currency went bad. So the American Empire is going to do the same. The British Empire, likewise, once they went off the silver standard and the gold standard, their empire fell. So will ours. It's going to happen. Now, what happens to Europe and Lithuania at those times? I'm not quite sure because Russia also has a fake currency. They don't have gold-backed money. When everyone goes to gold-backed money, I think we're going to see much less war because war is very, very expensive. Yes. And when you have to pay for war with gold, people are like, let's not fight. It's too expensive. To answer your question directly, it's the same thing I've been saying before. This is over. This Ponzi scheme is over. This is the final days or months or years. We're not going to 70 more years. We're not going to $200 trillion in debt. America's flat broke. Americans are flat broke. And that's people, people are used to thinking of Americans as very, very rich. We are broke. I'm thinking America after this, we're not going to have socks for a while. Kids are going to walk around with no socks. That level of poor.
Phill, might it be just an inside job? Sometimes I think that the trend of de-dollarization is intentional. United States has weaponized the dollar and its treasuries. US informed Saudi Arabia that it's going green and no longer needs fossil fuels. Instead of holding Federal Reserve and the Treasury Department accountable for decline of American dream, people blame Xi Jinping, Putin, or OPEC countries for dumping US dollars and treasuries. Actions that United States essentially insisted upon. Don't you mind if we talk a little bit about Iraq? What's your opinion about Iraq?
Iraq, the country?
Yes, Iraq, the country, and United States invasion into Iraq.
Oh, okay. I can talk about the geopolitics of it. So first off, to answer the question more broadly about the world reserve currency, the world reserve currency is typically only the currency that best reflects gold ends up being the world reserve currency. So when the Dutch guilder was the world reserve currency, it's because you could get gold for the Dutch guilder. Mm-hmm. And it was the easiest way to get gold. And then it was the British pound. You could get gold for the British pound. And then it was the American dollar, where you could show up with dollars and get gold. So when this blows up, whoever has the best...
It's from Ray Dalio, I think. He wrote about the principles of dealing with a changing world order, why nations succeed and why do they fail. He spoke about the empires and the end of the Roman Empire, about the Dutch Empire and British Empire. I like that You're reading the same books as I am.
When an empire goes off, one of the things that happens, inevitable with imperial decay, is that they debase their currency. It happened in Rome, happened in England, happened with us as well. When we debase the currency, especially in the modern system, when you debase the currency by closing the gold window and just printing notes, one of the things that happens is the debt must grow at an exponential rate. If the debt does not grow exponentially, the currency dies. What is a great way to increase your debt, Tadas? War. Invade other countries. That's a great way to get the debt to go up. So the Iraq war is just a function of the debt. So Syria is a function of the debt. We want to blow up Iran now. That's a function of the debt. Once the debt blows up, the American government is not going to want to go to war anymore. We're going to be on a gold standard. We will be a peace-loving people who mind our own business and don't want to go into foreign empires or don't want to create a big empire in foreign countries.
The whole world sees United States as a highly hypocritical country. And what the rest of the world does, instead of rolling over United States government bonds, they are buying commodities and the whole exchanges. Did you hear that London Metal Exchange sold to China, and China now owns that exchange?
I did not know that.
Yeah, it's not LBME, but it's LME.
CBE.
It's the base metals.
Okay.
So the other countries right now and all the other central banks are buying gold, which is why it has doubled its performance comparing to during 25 years and compared to 10-year treasuries. Gold has no counterparty risk, right? It can be stolen like bonds. And I think what BRICS is going to do is to create the new currency called the unit. Have you heard about it?
No, I haven't.
The architect of this new currency system is Sergei Glazyev, a financial advisor to Putin, who discussed the unit 2 or 3 years ago. This system will be digital and will require gold, as it will consist of 2 baskets. One of the basket will consist of BRICS currencies, and the other with commodities, where gold will be the leading precious metals. What do you think about such a system?
The other commodities are going to fall by the wayside. It's only going to be gold. The other stuff will be proven to be not useful because it's not a money. It's not a good money. So if it's redeemable for gold, so if you can show up with units and get gold for them, people will probably use it. I don't see a problem with it. Now, does it spy on you? And does it block your ability to buy things? Tadas, you bought too much steak this year. We're not going to let you buy any more steak. Then people won't use it. Then people will. The market has a say, right? If you want beef and your currency won't let you buy beef, but the butcher wants to sell you beef, then you'll trade in silver. You'll say, look, I'll go home. I'll get some silver. I'll come in, I'll trade you beef, and we'll just use silver instead. So the market always has a say. There's always a black market. For the unit to work, it would have to be redeemable gold. If it's redeemable gold, it'll work. And the whatever this unit is will be the next world reserve currency. It doesn't matter whose picture is on the bill. It doesn't matter if it's George Washington or the Queen of England or, Genghis Khan, Joseph Stalin. It doesn't matter. If it's redeemable for gold, that's the only thing that really matters. And then we have an honest monetary system, and then it's fine. There's no problem.
And what do you think about democracy or totalitarianism? Free markets may function in totalitarianism as well as in democracy?
Yes. Democracy is just 2 wolves and a sheep voting on what's for dinner. There's no guarantee of safety for democracy at all. And all of Europe and America are supposedly democracies. And are any of us happy with the government we have right now? No, not at all. Because you can vote, we can vote whatever we want. I could say, we'll vote to give me all the money, For it to work, we have to have free markets and free market exchanges. Republics seem to be better at that than dictatorships, but you do have, you have governments like Pinochet he was a dictator, but he had a pretty open free market. I think Duterte in the Philippines was similar. So you can have, good dictators, this is coming out badly, but you can have, a good government that is not a democracy or a republic. It seems that republics do a better job as long as they don't fall into the trap of voting to give everybody everything.
So, okay, Phil, the last one question. So how do you think de-dollarization is planned process in the United States?
Once you understand that these politicians they don't understand that gold is money, it's much clearer. So because they don't understand that gold is money, and it's the same in Europe, they're trying to save their currency, and they will do anything they can to try to save the currency, and it's going to blow up. There's no I don't think there's any controlled destruction planned, and I don't think there's some secret cabal of people that are going to take over at the other end. This is just going to blow up, and we're going to go back to a gold standard after a lot of pain and chaos. I don't see any other way out of this.
I might be confused because your leading economic advisor, Jared Bernstein, who has a degree in music and master's degree in social work, wrote an article titled "Dethrone King Dollar." And it seems to me like everything might be just planned, because in such a position usually works economist, not a musician.
Yeah. So the Hayek wrote, the curious task of economics is to demonstrate to man how little they really understand about what they imagine they can design. So man, especially, there's a lot of ambitious men who think the world will be better if I am in charge and I'm controlling everything. And they always mess up because they always try to pretend they're God. They always try to play God, and I'm going to control everything and I'm going to make the world better because it's the way I want it to be. They always mess up. They always make everything worse off. And then we always end up back on a free market, but it's always a painful lesson to get back there. It'll be the same in Lithuania this time. It'll be the same in America this time. The best way to prosperity is freedom, liberty, free trade, free markets, and as little government involvement as possible in our daily lives. So
thanks for tuning in. Thank you very much for your interview, Phill. I hope to see you next time. And thanks for watching. Bye-bye.
Take care.